Hi, it's David here with Futures Trading. I want to make a follow-up video for the video I made on yesterday, and I want to thank you, Yana. I hope I'm not pronouncing your name wrong, but thank you so much for coming on board and the kind words there. I appreciate that. I hope that the information here gets you whatever you want out of it. Okay, out of trading, I really want you to succeed. I want to have you know that that's what I made the channel for. I want to make sure that the information provided is condensed and digestible. So I want to make sure that what you're learning that you can be able to explain it in plain language to someone else. All right. So that's the whole goal of the channel. And thank you, Dimitri, for, of course, inviting her to come on board. I appreciate that. Thank you so much, my friend. Remarkable fellow you are for having done that. Let's take a look at some information really quickly here. I'm not going to hold you long. This is yesterday's video that I put out. I thank you guys for being supportive, liking the material because we want to share it with others. That's the main goal. We want to get the algorithm to tell people about us and say, "Hey, look, come over here. This is a safe place to learn. The information is simple, and you can, of course, spot it every day." All right. So, want to kind of follow up on some of this information that I told you on yesterday. So, I made the video at 7:23 yesterday's morning. Now, at the 49:26 mark in the video, I, of course, told you guys, yesterday that if the mid of the daily bar was to get below the low of the day before, the turnaround could be there, So start looking for it around 15,780-ish. And that was at 11:39 bar. The 11:39 bar. Now remember, I shot the video at 7:23 in the morning. The 11:39 bar, the low of that was 15,796. Now remember in the video right there, 49.26, I said 780, 796. Now let's go take a look at that. There's that 11:39 bar right here. All right, so the low of that is that 96.75. So 15,796.75. And now we're going to take a look at today's activity. All right, now that's yesterday's low when I shot the video. All right, now let's go over here to this morning's activity and let's kind of pick apart some of this information. Again, I'm not going to be before you long because I want to make sure that you can retain the information. And this video is going to be just like yesterday's video. It's going to be about how to utilize the price pattern to catch the turns, and it's really simple. It's not complicated. I mean, that's the whole goal of the channel is to try to make sure you can do that. So 930 bars here. Let's kind of slide this over. 930 bars here. There's your trend. So if you're new to the channel, you would count 7 from the high. So this is the high up here, okay? And they all have to be lower. So that's 1, 2, 3, 4, 5, 6, and there's 7. They all have to be lower than the prior. So you don't count any red ones in between. That doesn't matter. And then you project that distance from the high to the low of that 7th bar, and then you project that forward. It's just that simple. Try to find the participation bars in the move down because oftentimes they'll be at the center of the trend, the COT, the center of the trend, and they should be on the pullbacks. They should. If it plans on going, it should be there, hopefully. And sometimes they may come in a bar later or two later. The sooner they show up, the better. Just think of it that way. The sooner the better because it's participation. The sooner it shows up, the better. And so then they made the trend distance. All right. Now, here's 930. And of course, they, popped up and then they gave you some more of the trend distance. All right. I didn't put it down there, but you can see it. There's the trend distance. Again, they gave it to you. Then they popped up and made a trend this way. And you count, of course, 7 this way. It's really simple. Just 1, 2, 3. They all have to close higher than the prior. 4, 5, 6, and there's 7. That's the center of the trend, the COT, center of the trend. When they come back this way, it should be some bars right there to kind of help support that whole concept of going back the other way. It should. Now, it don't have to work, but it'd be nice if it did. That's all. They went, of course, this way, but then they fell down. Well, that's not fun. 1, 2, 3, 4, 5, 6, and here's your 7th one. All right. Now I forgot to put the projection on that downward, but let's do that right now while I'm on here. I kind of put it up there where they kind of came back, but we don't know that's going to happen. So let's do this. Let's do this right now. I kind of missed that. I'm trying to draw up the chart. I kind of again, want to make sure that the support is there, because when I take the time to do this, it does take up at least 20 to 30 minutes of my time before I even get on here to shoot the video. And it would be nice to make sure that people, do understand that and support the information, because we're trying to help others. That's really important. And most people, again, professionals anyway, won't slow it down and show you this. They won't show you what's consistent. I can guarantee you that. And so this is that trend distance off of that seventh bar. Now, if they don't go off the seventh bar, if they pull back, you'll still get it. I just forgot to put that there. All right, now let's go forward. They of course broke this trend. All right, so they ran through the trend before pulling back. They ran right through this uptrend, so that didn't work, and so you had a fail trend distance, so that didn't work. They came back up. This is not 7 bars, absolutely not. So that's 1, 2, 3, 4, 5. That's 6. That's not 7. They didn't break the back of the turn. They turned around and they gave you the distance back down. All right, so now off the bottom, you do have your 7, and this is that low. And so they didn't get all the way there, but you still managed to get it in here. All right, so you still managed to get it in there. And so 1, 2, 3, 4, 5, 6, and there's 7. Here's the center of your trend here. I just forgot to mark it, and then there's your trend distance, and they made that. All right, so from yesterday's low, now let's look at it. Yesterday's low, they never broke it. So that's this morning's decline. They never broke yesterday's low. Let me take and do it this way so you can kind of see it. See, this yesterday's low, they never broke it. And I told you in that video that the buyers could possibly step in down there, because we was looking for whether or not that daily mid, the mid of the bar on the daily, would trade beneath that low. Now let's just look at this for, I don't know, maybe 5 minutes or so. And then of course you can see it from that vantage point as well. Now with the hourly, let's pick apart this hourly just a bit. Let me get a little bit more data on this, and I will let you go. And again, thank you for coming on board. If you're new to the channel, thank you for stopping by. Thank you so much for being a part of this. All right, it's really important that you do that. Now, with the hourly, I'm gonna try to blow this up, and then we'll take about 5 minutes to look at the other information here. Off the high, let's do this. 1, 2, 3, 4, 5, 6, and there's 7. So you have 7 there. Center of all of that would be roughly right about here. Okay, so we'll do something like this to this effect. Now off the bottom, let's take a look off the bottom. All right, so 1, 2, 3, 4, 5. Okay, that's 5, 6. All right, so we got, let me make sure, 1, 2, 3, 4, 5. Make sure it is high. That's 6. All right, and they came down here. They didn't break it, and now you have your 7. So we could definitely go ahead and move up. I thought they had 7 in there, but there you go. There's 7 right there. All right, so now you got 7. They put the center of the trend kind of before they took off. It was down here. That's why all that fighting was going on this morning. They kind of did that, And of course, Dimitri, you and I in our payment, we've been talking about prices. So, and they should get up there. They should. I don't suspect they'll want to do this again. Let's hope that they don't. So that's what the hourly was doing. Now let's take a look at this information side by side for just a few minutes here, and then I will let you go. Now, if you're new to the channel, I'm gonna tell you what the price pattern is. It's really simple. You want the bar for the up anyway. If you want to go up, you just want that mid of the bar, which is that black floater. So that this black floater right here is the mid of the current bar. All right. You want it to go up, you want it to be above the high of this bar. Now, if that scenario is not there, you're going to get overlap. You're going to get a bunch of this, and that can help you to know if the market will reverse. So now, if you want to go down, just flip the scenario upside down. Just flip it upside down. You get the bar, and then you'll want the low. Let me just kind of do it for you in case you don't know. You'll want the mid to be above the below the low. So you'll want the low above the mid. Okay. And then that should go down. Now, if the mid is still inside, and I don't want no one to underestimate what it is that I put out, because it's simple and it's very powerful. because I showed you with the daily. That's the whole purpose of the video, to make sure that you understand what I told you yesterday, that it's possible that the buyers will pick it up. It was just based on this information, that if that mid is falling into the prior bar, you can get the overlap. It's chop. You don't need 150 bars, drawing some support and resistance, waiting for some break, retest, and you don't need all of that. You just don't. Um, Once you see the mid is still operating within the prior bar, and all you gotta do is look at the, well, that's time up there. You can look at the clock and say, hey, most of the time that's on the bar is being, utilized, and this mid is not getting above that high. It's not getting above that high. You can almost bet yourself that they're coming back. It's an automatic. All right. So got 30 seconds. The mid is at the high of the bar. Can it remain outside the high of the bar for the next 26 seconds? If not, you're going to see the price rotate backwards. But if it plans to do it for 26 seconds, it should kind of pick up some speed. It should, hopefully, because then this becomes the no close bar. That becomes the hard stop. Now it's 11 seconds. If they try to hurry up and get back down here inside this bar, this mid will come back. Your top of your chop is going to be up here. Okay. And then, of course, it'll be back down in this area as well. But it didn't make it. All right. So it didn't make it. The bar, stalled out. This is a no close bar. This is the hard stop bar. And what makes it really, really simple and yet powerful is the tug of war. And so this is initiative. The longer you watch price, with me, of course, telling you that the mid is the significant part of whether or not the market will move in your favor. I mean, just have that force behind that move, has a lot to do with the tug of war that's happening with the bar. And that's all. It has a lot to do with that. And so this mid needs to clear this high. You can break the high. I mean, that's fine. Break the high, that's fine. And it's not to say price can't go, it can. I'm talking about the participation and how much of a fight you may deal with on your hands. So when you take the position, it may come back against you. I know a lot of traders know that that tends to happen. Once you take a position, it kind of rotates behind you. Of course, it has to do that to let you in, but then sometimes it can take longer to get back on its way. And I want you to know what that is. I want you to understand how that's possible. All right. So we know that this bar's mid did not get above this high. And here comes the rotation. So here comes your range. Here comes your range. Now, this price level is important. No close. This is the hard stop level. And so now we have to see, we just have to see. Let's hold on. Okay, it just stalled. It's stalling for a second here. I thought I thought the platform was about to freeze. I'm like, don't do that. So this is the no close level. This is the hard stop. So now your range is from here to here, that they can play with you. All right. Now this is the no close level. So they ran under it. And now they're coming back above it. So it doesn't take, again, 30, 40 minutes, an hour, get a whole bunch of bars, let's talk structure. It doesn't take all of that. If you want to find just, of course, distance, whether or not your distance can be made. I'm telling you, the 7 bars, you can almost live off of that. I promise you, you can live off of it. You can. But if you want to time it for reversals, this is a whole nother aspect of trading. Now, this is something simple. I'm just telling you to just flip the price pattern that I taught you, flip it on its head, just turn it upside down, and you can get an idea of how to do reversals, just an idea of how to do it. And there are some other things I can tell you about reversals that makes it even that much more uh, sensible for it to happen. It'll make sense for it to happen. But I think this is a good foundation for anyone that's trying to catch a reversal. Start here. If you can't get that mid to fall beneath this low, you can get a rotation. Now it can stay in here. Bar can tick out. You got 8 seconds. It's starting to fall beneath the low. This bar will turn red. Hard stop will come into play right there. And so you're getting the initiative from above. You're getting the initiative from above you are. And so it can go beneath here. And then you say to yourself, once it triggered a stop, I believe it can trigger that stop, trigger this one, But once it falls below this low, there's a chance if that mid is still sitting close to this bar's low, you can get a rotation back up. So anyone that's catching the short for the break, on the short side, what could wind up happening is no sooner you take the short, it'll, vacuum back up, and then, of course, you're receiving drawdown. It intimidates you to want to get out. Now here's the mid beneath the low. You got 25 seconds. If they have no intent on keeping that low, well, the mid beneath that low, it's going to vacuum back in there, and then it's going to give you another rotation up, just like it gave you the rotation down when this bar's mid was still inside of this bar. So if you're looking for the counter move, the hey, is it going to last? Is my trend going to last? Is it going to turn into something else? Will it be a pullback? I just look at it as mere reversion, like it's just reverting. It's just reverting. It's always reverting. Price always has a trend, contrary to what anyone would tell you on any other, of course, channel, YouTube channel. They'll tell you, a lot of stuff about price, but it's really simple. Price is always trending, and I'm gonna say it again. Price is always trending. It just may not be, of course, according to the direction you may want to take at that time, but it's always trending. All you have to do is start dropping your time frames down, and you'll find your trend. Now, every chart has a trend on it. It does. You can pull up any chart and apply, the trend method that I'm telling you, and you will see there's always a trend. They may just be stuck between two trends, or they're into the center of the trend that's on the board. But if you want to find a trend that you want to trade, because price is fluid, if you want to find a trend that you want to trade, drop your time frame. So if you want to go up, if you just want to go up, go long, go bullish, go to a time frame that's bullish. If you want to go, short, go to a time frame that's short. So if you come down into something like a 5 second right now, this is trend distance. So you can find the reversal. You absolutely can. And that's why I told you on yesterday that if we were to go back up, we would use the daily. Okay. We would use this daily here, and we would wait it for yesterday's midpoint, the mid of yesterday, to fall right under this low. Just get really close to it, like it's going to fall under it. And that's why I gave you that price, and it got sucked right back in there at 11. I think it was 11:39. It got sucked right back in there. Now we're still waiting for the trend distance. Now, can they run straight away to that trend distance here? I doubt it. I'm gonna be honest. I doubt it. I don't see that being possible. Now they can, if they come back with some more of this, they can, because then that'll land them. I do think they can get. I think they can get here. But you may get you may get a move back this way before they get here. You may, but I do think there is a chance that they can probably get here. And then you may get a little breathe, and before they hit that trend distance. But that's my time with you guys. Again, the channel. I want to make sure that I express this to you. It's all about this information here. It's all about this. All right. Now I want to give you procedural knowledge, an established or an official way of doing something. All right. I want to make sure that you understand that the mechanic, anyone, they have procedures that they go through, the doctor, the courts proceedings. They have a, a format of how they proceed to doing the things that they do. Trading is not a place that you want to develop various different tactics on how to do it, because the chart is going to always do the same thing. And that's kind of why traders get a lot of different results, because we're all applying different things. But if you would, and this is all I'm doing, I'm taking notice of what the chart always do, what it always do. That's a procedure. It always go through a function, something that it always do, and it doesn't matter what indicator you're using. You can get software, book map, you can get whatever you want. And if that helps you to want to, or build any confidence, and I ain't gonna say help you, but build any confidence in you to want to pull the trigger, then use that. Use that. Use the moving averages. Use the oscillator. To me, you can just apply this price action method here, and it's like an oscillator. I'm gonna be honest with you, because you'll know when the cyclical activity should come about. Now, I didn't point to the other time frames, but hopefully, if you pause the video and you go back, you would see that, at any given point, as this was progressing, you probably saw that these mids was doing a particular thing. Now, I would like to say that this mid here wasn't above this high, because this bar, wasn't even close. It wasn't even trading above this high. So even the more so, this mid was there. All right. So That's my time with you. I wanted to make sure that I expressed that to you, that the information on the channel here is, of course, all about procedural knowledge, really about procedural knowledge. Other YouTubers, they're doing this. I'm not going to do any of this stuff. I'm not trying to sensationalize trading. I want to help you get the results that you need. If you would, be kind enough and be what you would want to see in the world, because that's what I'm doing. Try to align yourself with what makes sense. Want to help others? If you join the channel, if you're stopping by, do me a favor, help someone else. Hit the like button, tell someone about the channel so we can get, of course, people aware of how simple trading can actually be. It doesn't have to be complicated. I want to help as many people as I possibly can see the right direction. There's not many professionals that would step online and show you anything that's consistent. So if you would take the time to share the information, all right? So I hope this has been helpful, and I wish you all the best with your trading. Take care.